Chancellor Rachel Reeves has been hinting she might raise income tax to plug a large hole in the budget. But the government now seems to be steering away from anything that might break manifesto promises. My name is Robin Moore and welcome back to this week's episode of Tax Tidbits, where the Office for Budget Responsibility published new forecasts that showed the hole in the budget wasn't quite as terrifying as first thought. The hole has been reduced from £30 to £20 billion, a significant decrease that will have impacted Reeves' budget plans. The original 2 up, 2 down plan would have raised taxes by 2p while cutting national insurance by the same amount, aimed at more at landlords and investment income than ordinary workers' pay. But after all the will she won't she drama, the government's mixed signals spooked the markets, sending borrowing costs up and leaving everyone a bit jumpy. Reeves is now expected to hunt for money elsewhere, likely by keeping tax thresholds frozen so people quietly drift into higher tax bands. With the budget still being written ahead of the 26th of November, the hope is that the rest of the process involves fewer U-turns and less panic all around. UK inflation has finally dropped to 3.6%, the slowest rise in 4 months, helped by smaller increases in energy and hotel prices, though food costs, of course, have crept up again. While inflation is easing, prices are still rising faster than the Bank of England's 2% target, so we're not popping the champagne just yet. Or if you are, they probably cost more than it did last year. The fall is slightly less than economics expected, but it comes just ahead of the government's budget, where Chancellor Rachel Reeves is promising to tackle the cost of living, while shoppers and mortgage holders are just hoping interest rates start heading south. Interestingly, 2 wealthy businessmen, renewable energy boss Dale Vince and lawyer Stephen Kinsella, are publicly urging the government to tax millionaires, like themselves, more. They're arguing that the UK needs extra revenue and that the richest should be the ones to contribute to a fairer society. They've joined a group of more than 85 other millionaires called Patriotic Millionaires UK, pushing for a one-off tax on wealth over £10 million. But Chancellor Rachel Reeves isn't biting, insisting that the UK already taxes the wealthy and doesn't need a standalone wealth tax. But maybe this is exactly the push she needs to finally jump on board with the wealth tax. From December, UK banking customers will have greater peace of mind as the deposit protection limit rises from £85,000 to £120,000 per person, the biggest increase since 2017. The change, confirmed by the Prudential Regulation Authority, will apply automatically without any forms or fuss. Temporary high balances like proceeds from house sales or insurance payouts will also see protection rise from £1 million to £1.4 million for 6 months. Regulators say it's all about keeping confidence in the banking system while reminding us to double check that our money is held in FSCS protected institutions. The UK's competition regulator, the CMA, has launched its first investigations under new consumer protection powers into 8 companies, including ticket resellers, gyms and homeware retailers, over online pricing practices like hidden fees, drip pricing, misleading countdowns and automatic add-ons. On top of that, 100 more businesses have been given a nudge to make sure they're following pricing rules or they risk fines. The investigations aim to make online shopping less of a surprise and make sure the price tag actually matches what you pay. Though the regulator hasn't yet concluded whether any laws have been broken, let's just say a few websites might be feeling a bit nervous until the next update in March. That's a wrap for today's instalment of Tax Tidbits. I hope you've enjoyed this week's news highlights. Be sure to give this video a thumbs up and subscribe to our channel. And join us again next Thursday for our next episode.